With the major averages set to close at their lowest levels since May, is this the final shakeout? Is this the time to start buying? Let's bring in the floor show. Joining me now, Carnivore Trading's Dutch Masters, who's been making trades, I don't know, in the last 48 hours that we got to get to, and Nat Alliance's Andy Brenner, who's digging down into why the market is coming back right now. Let me start with you, Andy. Why is the market at least chopping many of the losses in half or more right now?
Liz, it's all about interest rates. Yesterday, interest rates got crushed. They were down 10 to 15 basis points. This morning, they came back a little bit. At 1 o'clock, you had a very good 7-year auction, and at 1:30, you had Janet Yellen out there saying that we're going to cap interest rate expenses, that things aren't that bad, that we expect interest rates to come down, and that has doubled where 5 years and 10 years are. They were better by 6, now they're better by 11 or 12, and we've seen that correlated with the equity markets coming back a bit.
So it's falling bond yields, at least on the shorter end that we're seeing. We've got the 6-month, the 1-month, the 3-month. Those are coming down. Right now, we still have the 10-year.
Well,
it's
the
falling,
5-year and 10-year.
4%.
Right. I didn't catch
here's
what
4.85%.
4.85. At one point, it was 497, 498 overnight. So that's significantly better.
Okay, and that's absolutely helps the markets. I mean, look at the Dow now, down just 58 points. Let me bring in Dutch here. Dutch, you've been making trades all over the place, particularly considering that the NASDAQ, I was getting calls from college kids, why is the QQQ falling so much? And that was about 4 hours ago. Here we are.
Right.
It's trying to come back, but it did go into correction yesterday, and you went long.
Yeah, we like the tech trade here. We're usually a little early on our calls, so here's what we see. We think the Fed's going to have to lower rates faster and sooner than they're letting on. And we actually think that by this time next year, we could see the 10-year at 2.5 or 3%. I mean, really a lot lower. We don't want to be short here. The market, the stock market. I mean, we're not bond experts, but we don't operate in a vacuum. We have to see what's going on everywhere and how it affects, what we're doing in trading. But we really like this. This is the last kind of leg down. This is where the big tech stocks that have been holding everything up for so long are finally repricing. Now that they're repricing, that's sort of the last leg. Now, like I said, we're usually a little early. There's going to be maybe some more selling to go, but we are getting close to where we're going to have a nice platform to trade on the long side now.
Well, and you're also saying everything at this point you say gets better, completely opposite of what Leon Cooperman told us yesterday, where he said there's a shift in sentiment and the market's just going to be adrift. But I do have to also bring this up, Andy. We got first-time jobless claims, which were a bit hotter than expected, higher than expected. This is the number that you want to see come down, meaning fewer people joining the unemployment rolls. But this time it went up a bit. That certainly maybe makes the picture stronger to what Dutch just said. And you believe that the Fed is done. We saw ECB make no move today on its interest rates.
That's right, Liz. We've gone out last week. We did it on a competing show. Sorry about that. And we said done, done, and done. And that's what we believe the Fed has done. Today we said the same thing about the ECB. They're both done. And I think Dutch is right on to something. I said that I expect a year from now, 10 years to be 3.5. They're 4.85 right now. So I think we're going to see a pivot from Powell next Wednesday in the presser, similar to what Jefferson said maybe about 2.5 weeks ago now. I think the Fed is very concerned about the term premium, in other words, in English, what long rates are going. So where long rates are. And I think it's worth the equivalent of about 3 tightenings, given where 10 years have moved in the last month. And I think the Fed's very concerned about that. I think Powell and Jefferson are concerned about that. I don't know what any other Fed governors are thinking.
I will forgive you for cheating on me, something that Dutch never does. Dutch is always on the Claman Countdown.
We love you, Liz. We love you.
Dutch, where else did you go long in the past 48 hours? I know you like Woof, Qualcom.
Yeah. I love Petco Health and Wellness, which is Woof, W-O-O-F. It's a real kind of come off the bottom trade here, $3.30, $3.40 stock with a $9 book value. We also bought some natural gas ETF. It's BOIL, Boil. We think that there's going to be about a 30 degree drop in temperatures next week, so could boost that from a 64 area to a 70, 72 area, so that could be a decent trade. And we bought some Qualcom. We really like, what's happening over there. We're in touch with the people that they seem to be hiring because we went to college with them. And these are now guys that are being brought over there. And we think we could see that battleship turn and really do something great.
Dutch and Andy, as always, thank you. Rocking and rolling here. Again, off the lows of the session. Let me just check.